we have regulatory perspective also. We have a wonderful presentation which has been prepared on the regulatory latest developments, as the team is known for the best and the latest developments are analyzed, and a 360-degree perspective is given in the think tank deep dive series since a long time and in times to come. Wonderful presentation, Sandeep Maheshwari. Can we have the latest on the amendments and developments and on the front, on the market trends, and a deep dive into the order on what is happening in markets and what has happened this week particularly?
Thanks, Manoj. I would like to thank the think tank series for giving me the opportunity of sharing my view on the current SEBI case, which has come in the case of the stock 2020 session being held by Hemant Ghai. I have a small presentation on that. Okay. So we going to discuss about the FUTP, basically the regulations from SEBI with respect to prohibition of fraudulent and unfair trade practices. So where they have specified certain rules and regulations so as to avoid fraudulent activities happening in an organization. Okay. From today's perspective, I would like to cover on the SEBI Act, the SEBI FUTP regulations. We have the latest the SEBI order talking about the Cnbc Awaaz Stock 2020 show, which is hosted by Mr. Hemant Ghai. And then particularly this order against Hemant Ghai covers his mother by the name Shyam Mohini Ghai, as well as Jaya Hemant Ghai, in whose names the particular transactions have been done by Mr. Hemant Ghai as alleged by the regulators. Okay, now how do you look at this scenario? What's currently happening? The markets are booming up, stocks are going up, people are very much influenced by the media. They normally try to take the option of whatever is being said or promoted by the media. That's where SEBI as a regulator becomes very concerned, very vigilant, and would like to understand and assess everything, whatever is happening into the capital markets. SEBI as a law or an act has been formed with the objective of investor protection and trying to see that the capital market is being used more as a wealth generation exchange rather than trying to use it for their own use of making profits. Okay. So now talking about the specific sections which have been particularly specified in this current order, SEBI talks about the sections 11.1, 11.4, 11B1 and 11D of the SEBI Act. SEBI as such has been a very old SEBI technically Act was formed in 1956. However, that time probably did not have a lot of teeth to control the capital market scenario. That's where the SEBI 1992 Act was, formed, where the regulator were given powers to take up, cases against all manipulators. And later on, as you find that the SEBI's functioning has been good, SEBI has always been given additional powers by the Ministry of Finance so as to regulate each and every activity. Like even say collective investment schemes have come in. SEBI further has certain regulations for controlling research analysts. It has also come with controlling the investment advisors. So that way, a lot of scenarios happening where SEBI as a regulator has been trying to take a lot of care on that. Well, let's talk about the section 11 of the SEBI Act, which basically talks about the functions of the SEBI. Now, in that case, I've just quoted the section for the use of the readers that the 11.1 section technically authorizes SEBI to do anything. Like it says that subject to provisions of this Act, it shall be the duty of the board. The board basically means the SEBI board, Stock Securities and Exchange Board, to protect the interest of investors in the securities and to promote the development of and to regulate the securities market by such measures as it thinks fit. So this particular section you will find that is being quoted in each and every order which is being passed by SEBI. Reason being, this is the section which technically gives power to SEBI to do any activity wherever it feels it has not been done in the right manner. Further talking about the section 11.4, it says that the board may, by an order for results to be recorded in writing in the interest of the investors or the security market, take any of the measures, either pending investigation or inquiry or on completion of such investigation as or inquiry. B, that section 11.4b authorizes restraining persons from accessing the securities market and prohibit any person associated with the securities market to buy, sell or deal in securities. D talks about impound and retain the proceeds or securities in respect of any transaction which is under investigation. What I actually want to say out of this particular section is that the board has been given powers that even if they have a certain level of suspicion and they get into the process of investigation, they have powers to restrict any person. If talking about the current case of Hemant Ghai, it is also an ad interim order, indicating that this order has been currently issued on a temporary basis, considering the current scenario, whatever they have known as of now. And the investigation process from SEBI is still on. So SEBI has got extensive powers. Going further, what I'm trying to cover now is that I'm trying to have the sections SEBI Act being covered first, then talking about the FUTP, what are the powers, how does it work, and then we'll get into the Hemant Ghai discussion case. So talking about the powers of directions to levy, 11B authorizes that in the interest of investor orderly development of the securities market, or to prevent the affairs of any intermediary or other person referred to in section 12 being conducted in a manner detrimental to the interest of investors or the securities market. So this section 11B technically talks about that the actions what SEBI is taking is in the interest of the investors and with the reference of long-term market situation. Now I have tried to specify that this particular 11B talks about the various penalties which can be levied. Now, in general, earlier SEBI was not having a lot of teeth, so it was not very well considered by people. But currently, SEBI has been given tremendous power and the right on them to charge penalty on any violation has been also very high. I have quoted like 3 particular sections. 11B talks about the penalty for default in case of an investment advisor or a research analyst. So where SEBI finds that any investment advisor or a research analyst has not acted in the manner as specified under those regulations, then it can penalize anybody with a fine where the fine should not be less than 1 lakh and where it can go to a maximum of 1 crore. Similarly, under section 15G, there is a penalty for insider trading. Insider trading basically means any trading done on the information which is known only to you and which is not known in public, then it is supposed to be that you have insider information about it, and all the people who are a part of that insider trading activity can be held responsible. And under that section and the provision, SEBI is allowed to levy a penalty from 10 lakh rupees to 25 crores, and it can even go to 3 times the amount of profits made by the insider trading, whichever is higher. So that is where SEBI has tremendous powers. However, we have not found SEBI levying a lot of penalty as of now, considering the right what they have. But it is still under discussion, and there are a lot of cases which are going on. Talking about the section 15HA, it talks about the penalty for fraudulent and unfair trade practices. So if what is it? What is it with fraudulent? Fraudulent basically means anything which is done with the intent of fraud, defrauding or fraud, with the intention of fraud. And unfair means something which is not done in a fair manner. There, the penalties can go to an extent of 5 lakhs and to a high extent of 25 crores or 3 times the profit, as I said above. So these are the penalty provisions which are there, which SEBI is authorized to charge on the people. Talking further, we even have the 15J section, which basically talks about the quantum of penalty. How can the board take it over? So it has the amount of how is the amount determined? So while adjudging the quantum of penalty under the board shall have due regard to the following factors: the amount of disproportionate gains or unfair advantage, wherever quantifiable, made as a result of the reform. So any order which is given by SEBI has to have a proper support of working as to how the particular penalty is being arrived at. Second, the amount of loss caused to an investor or a group of investors as a result of the default. And third, the repetitive nature of the default. So if a person is found to be repeatedly doing something wrong, then SEBI tries to penalize or even try to restrict the person from accessing the capital market for a long time. Talking about the recovery of the amounts, the section 28A of the SEBI Act authorizes SEBI to act like a recovery officer, the way we have in income tax or other laws, where they can use one or more of the modes for recovering the money by attaching the property of the person, by attachment of the bank account of the person, by attachment or sale of the personal property of the person, by arrest of the person, and they even have the right to detain the person. And they can even appoint a receiver for the management of the person's movable or the immovable assets. So this all authorizations or sections authorize SEBI to take various actions as required. Talking about the section 11D, it refers to after causing an inquiry, SEBI can pass an order, and such passing an order can become a case, cease and desist for committing or causing any violation of either person. Further, I am talking about section 12A, which talks about the prohibition of manipulative and deceptive devices, insider trading, and substantial acquisition of securities or control, where it says that no person shall directly or indirectly employ any device, scheme, or an artifice to defraud in connection with issue or dealing in securities which are listed or proposed to be listed on a recognized stock exchange. The reason for I trying to specify this particular section is basically these are the sections which have been actually used in the Hemant Ghai case, where on the basis of these sections, SEBI has tried to penalize Mr. Hemant Ghai. It further says the section E talks about dealing securities while in possession of material or non-public information, or communicate such material or non-public information to any other person in the manner which is in contravention of the provisions of this Act and the rules and regulations made. So I'll further discuss this case as we go into the actual scenario of what happened in the Hemant Ghai case. Now, talking about the SEBI FUTP regulations, we have the regulation 3, which talks about prohibition of certain dealings in the securities market. We will just run this a bit faster. Then we have regulation 4, which talks about the prohibition of manipulative, fraudulent, and unfair trade practices, where it says that no person shall indulge in a manipulative, fraudulent, or an unfair trade practice in the securities market. The next section talks about inducing any person for dealing in any securities for artificially inflating, depressing, maintaining, or causing fluctuation in the price of securities, though through any means, including by paying, offering, or agreeing to pay or offer any money or money's worth directly or indirectly to any person. So here, what is being talked about is that it is not that, manipulation just happens when you are trading on your own. It even happens where you are trying to influence anybody, and with that influence, if you are trying to make your own benefit, then it's not acceptable. The next section talks about disseminating information or advice through any media, whether physical or digital, which the disseminator knows to be false or misleading, and which is designed or likely to influence the decision of investors dealing in the securities. So this section 2K really talks about, even any information what you're trying to make aware to people has to be done properly. And third, lastly, knowingly planting false or misleading news which may induce sale or purchase of shares, securities. Now, I come down to the Hemant Ghai case, which is basically there, where it's CNBC Awaaz Talk 2020 show, which is being conducted by Hemant Ghai. As I said, it's just an ab interim ex parte order. Just to give a brief about this particular case, Mr. Hemant Ghai was holding the CNBC Awaaz Talk 2020 show. It was being hosted by him, and it was normally held in the morning from 7:20 to 7:50 a.m. Just to give a brief about Mr. Ghai have been hosting and co-hosting various shows. Like Stock 2020 is one what you were talking about, and then it's also used to be a show called as Munafi Ki Tayari, Pehla Sauda, Kamai Ka Adda. So by these actions, Hemant Ghai had actually created a position for himself where he has been having a lot of followers. He has been having more than 1 lakh followers on his Twitter account. And he used to basically do something called as a BTS trade. BTS trade stands for buy today, sell tomorrow. And to avoid that, Hemant Ghai felt that if he does not do the transaction in his own name, but he does in any other family person's name, could be something he would be saved off. It's not like that. When SEBI looks at it, SEBI looks at a person, even covering his family members. So here we have a case where Jaya Hemant Ghai happens to be the spouse for Hemant Ghai, and Shah Mohini Ghai happens to be the mother. What exactly are the main points? I'm just bringing to the notice of all. There were proceeds amounting to 2 crore 95 lakh 18,680, which he has been supposed to be earning. Actually, the earning amount would be more than this, but this is on the basis of some 90 trades which have been analyzed by SEBI for the period from January 1 to March 30th. The current status is that the current assessment is still on, and this proceeds amount can actually go up further. Then the happening was, there was a placement of order. In the case of placement of order, they were actually trading with a company called as Mars Consulting, which happens to be a franchisee for Motilal Oswal, where they were located in Mehsana, and the company said that they were actually placing orders coming to their office, which actually was wrong, right? Because the residents were of Bombay and the branch where he was trading was in Mehsana. So there have been even a lot of call recordings which have been available with SEBI, where Mr. Ghai has actually been talking to the people of Mars Consulting, and what, as I said, there was also similarity of address. So SEBI was actually analyzing the whole scenario in totality, and then finally they have come to a conclusion that Mr. Ghai had the advance information about the recommendation to be made on the show, and that he directly or indirectly used it to his own advantage. Okay, so these were the main points to give a crux of the whole scenario, but I would like to take you further to discuss about this modus operandi. Now, okay, SEBI, before I go into modus operandi, SEBI had actually tried to understand what issues are they really talking about. It has been various times found that SEBI tries to hold somebody responsible under FUTP or insider trading, but it's not really easy. They really have to do a lot of efforts in getting the right documents. Further, after the order comes in, just to give a regulatory perspective, if anybody is not comfortable with the order, then they have the right to go to SAT, that's the Securities Appellate Tribunal, to file a complaint against SEBI. After that, the current position is that any order which is to be any SAT order, if somebody is to file an appeal, then the opportunity is you want to go directly to the Supreme Court. The current scenario is that you cannot file a case in the High Court against any SAT order. That's how it works. So the issues were that whether repeated patterns of buying shares in the trading account of Jaya Hemant Gia and Shama Mohini Gia and selling the same immediately after the said recommendation. So SEBI has tried to evaluate, assess these four issues. Issue number 2 was whether the aforesaid prima facie pattern of trading amounts violation of the provisions of SEBI Act and the regulations. Issue 3 was whether Hemant Ghai and Jaya Ghai and Shama Ghai are liable for the proceeds of the said prima facie violations. And lastly, is there an urgent direction if any should be issued in the matter? Like as I was saying, SEBI has the right to pass interim orders or take action as required to see that any mishappening which is taking place in the market has to be controlled, and if it is requiring an urgent action, they do take the right for it. Well, just to bring to notice that SEBI had actually started investigating on this position since November last year, but because of their own efforts to comprehend all the situation, bring out a proper scenario, the order has come only on 30th of January. So when you talk about if there's a violation path, then these are some points which SEBI has been analyzing, on the basis of which they assess that yes, this person has done a violation over. One was whether there is any price and volume impact of the trading of the shares recommended on the show. Second was whether Mr. Ghai had the advance information about the recommendation, and if so, whether he directly or indirectly used it to his advantage. Thirdly, whether the trading pattern is a fraudulent scheme or it's an unfair trade practice in terms of the FUTP regulations. And if so, then what is the role played by all the three people in the scheme and the unfair trade practice? So this way, SEBI has tried to assess every point very systematically and give its judgment. Just for the information of all, I'm trying to put the modus operandi how Hemant Ghai worked. The show was co-hosted by Hemant Ghai, which gave a buy recommendation of particular script. He, having an advanced information of the aforesaid, a substantial number of shares were bought by him the earlier day in the name of either Jaya or Shaman. Then on the recommendation day, when his show used to be from 7:00 to 7:50, and that used to be on all the technically from Monday to Friday, all the working days when the markets are supposed to be opening at 9:15. So on the recommendation day, the recommendation is made in the show starting at 7:20. So he basically used to say people, oh, this is a good script, it's worth investing, there's a lot of potential, and that way he used to create an interest from the people in that particular script. And then as soon as the market used to open, he used to be first to sell off the shares. He used to sell the shares, whatever have been bought by him, so as to his advantage. And majority of the time, I'll say all of the time, he has been able to sell the shares at a good profit. So why are this? I just want to bring out that urgent directions were required by SEBI to against this person. One is the directions are preventive in nature. There is a high probability that he might continue to misutilize his position as a host, and using that position could even influence the other people. There was an intermittent threat of continuation of trading activity in furtherance the scheme that has prima facie been found to be violation of the SEBI Act. This would continue to assess and if he's allowed to continue to assess the market, primarily he will not be in the interest of general investors. So here's a situation where no specific person actually has lost money, but it is the general people at large who have actually lost money. Why? Because he's been recommending to people to buy. And we normally used to have a concept called as front running in the stockbroking industry, where when anytime when there's an institution who is placing an order, before the institution places the order, the particular dealer or the broker used to first buy the shares in his own name. After that, the institution trade was conducted, and after as the institution trade used to be voluminous and huge, the price rise used to happen. As the price used to happen, the broker or the dealer, whoever has bought the shares in his own name before the transaction, before the institution trade, used to sell it off, and they should technically earn money without much risk. So that way, the exchange SEBI has said that your action is actually likely to have a lot of harm to the market. It wanted to maintain a proper playing field for all the people, and any unfair dealing affecting the integrity of the market is actually questionable. So this is basically what I would like to talk about. I understand that there's a lot of hue and cry about it, but one thing remains, like it is said, all the what's in TV, hosts have been actually paying a lot of money, but then we don't know. And this is one of the first case which has actually been brought out in front, and a very well made order by Madhavi book, and we really appreciate her efforts. This is all I would like to share from my side, and I would like to have questions.
Sandeep, this is Sandeep here again. This is one of the things which really has come to light. But so a few days back, we had this case on Reliance where a 10-year-old issue was brought up. So if you could actually either Manoj or Sandeep can throw light on that, it'll be really beneficial.
So just talking about that particular SEBI order, which had come in case of Reliance Industries, where they probably had done transactions earlier. Actually, I'm not able to go through the whole order as of now. Manoj, can you just throw light on that, please?
Which order you're talking about?
The Reliance Industries order.
Well, I would suggest we restrict the discussion today on this thing. It's a series on regulation. So we will certainly cover lots of regulations by all the regulators globally and in India also in the forthcoming series. And today we have a lot of experts here. Maybe we can have a views of a few experts on this important issue which you have covered today. I feel, is that okay?
Sure.
Mr. Kannan would like to have your expert views on the latest development for the week. We'll of course discuss other orders also in the future, but today let us do on the latest developments on the week. It is very important and very crucial order.
Good afternoon to all of you. So one thing more than the particular order, I want to share here that if you talk about SEBI, even 5-6 years ago, they had 30 scenarios under which they would be able to capture these type of trades. And today, thanks to this adoption of artificial intelligence and other new tools, I'm sure they'll be able to even look at 500, 600 scenarios. And looking at the pattern of the trade, no need for manual.
He joins back. Can we have views from other experts who have prepared for the special discussion and open house?
Should we do the charts, Manoj?
Sure, certainly. Any views on today's thing? It is really wonderful. I wish we had the stakeholders also, because we have done a deep dive. It's a 35-page order, and also we wonder what is the most important which comes in from this angle is disclosure should be made, whether by the media or the employees of the media or various stakeholders, fund managers, analysts, sell side, buyer side analysts, because everybody has a vested interest. It is very clearly, regulators worldwide had orders for disclosure, whether it is a SEC in the USA, which set very high standards on insider trading and also this fraudulent practices. So there is always a temptation. Price movements are there every minute, every hour, every day. People talk about BPSCs. Of course, some people may say it's their own money, they are taking their own risk, is they are putting their own margins, and but there are always vested interests who seek to move markets, and they feel their information can move markets. But it's always said you can't fool all the people all the time, right? So that is very, very crucial. So don't try to seek viewers of channels, whether it is a broadcasting channels or whether it is internet channels. Don't consider the viewers as gullible people who will buy and sell basically on your recommendation. It's a very, very big market. Lots of information is available. Regulatory policies are there. Disclosures are there. Hope all disclosures are made to all the viewers of all channels, whether broadcast or internet, and everybody complies with all the orders. That is very, very key. The employer at a channel, whether the top people know the disclosure, or whether the businesses themselves, some of the people at the lower level, they have vested interest, whether it is coming from the top, whether it is coming from the brokers, whether it is coming from the investors, whether it is coming from the people who are bankrolling the buyer. Volumes are there. How do you do volume? Some people feel the media information or recommendation can increase the volumes. Who benefits from the volumes? The exchanges benefit. So lots of people have vested interest. Regulators are there for the safety of the investors. Information should be made, deep dive should be made. Every investor should be vigilant. It is what we say, Jago, investor Jago. Do deep dive, read the RHPs, read the fine print, listen to the experts, have open houses, interact, have views from 360 degrees perspective. That is the whole concept and what is wanted by all the participants of this special series. Wonderful insights, Mr. Kannan.